Hey everybody, Gary with Basecamp Trading. Let's take a look at one thing you can kind of keep an eye on that will help keep you on the right side of the market most of the time. Now, is it perfect? No, but a vast majority of the time, this will help keep you on the right side of the market. This is our 30-minute chart, and this is for day trading. This is our 30-minute chart. The cyan line is our 5 EMA. The red line is our 13 EMA. The yellow hash is our 50 EMA, and the purple hash is our 200 EMA. And you can see that as long as the 5 and the 13 are crossed to the upside, and especially when the 50 and the 200 are in alignment, we're looking to take our long trades. And you can see that for the most part, while the 5 and 13 are crossed to the upside, your long setups are working the best. You can see short setups aren't playing out real well. Then we get the high-low reversal bar here, causing the 5 and 13 to cross to the downside. We push down to the 50 EMA. We know the 50 EMA and 200 EMA very often significant support and resistance. You actually get a close underneath there, which is even more bearish. And you can see your short trades are for the most part working out better. Finding definite support here at the 200, popped under it, back to it, popped under it, back to it, back to it, and finally closed under it and made another push lower. Of course, didn't stay long. Again, the 50 and the 200 are significant on this 30-minute chart. You're back above, you break above the 50, causing the 513 to cross to the upside. Now your long trades are playing out for the most part. You push back down, 5 and 13 cross to the downside, and you kind of chop around the 50. Again, you look how many times you hit it there, hit it, finally close underneath it, 5 and 13 to the downside. Now you get some short trades. Pull down into the 200. Again, we know the 200 significant support, resistance. Pulled back up to the 50, made that resistance. You can see you hit it, above it, back under it, above it, back under it, above it, back under it, hit it again, and then you finally broke to the downside. And you got under the 200, and now 5 and 13 crossed to the downside under your major moving averages. And now, for the most part, your short setups are what you're looking at. Your long setups aren't playing out as well. You push back higher, and again, there's always going to be a transition period. This is obviously a large move off the power line here. So there's always going to be this transition period, but for the most part, as long as you're on the right side of the 5 and the 13, you'll be heading in the right direction. You see you crossed here, now your long setups are looking good. Kind of chop around the 50 and 200 again. Again, we know these are major moving averages. Get across to the upside, get a few long trades, kind of chop around, cross back to the upside, get some long trades. This bar causes the 5 and 13 to cross to the downside, kind of chop around the moving averages, get a few short trades. Not perfect, you're kind of in chop land here. 50 and 200 are pretty flat. 5 and 13 are crossed to the downside, but again, we know the 50 and 200 are significant support and resistance. You see, popped under it, back above it, hit it, under it, above it, under it, above it. These are major moving averages. You get to cross to the downside, get a close underneath, and now your short trades are working well. Get a little pullback because you got extended. Everything still stayed underneath the 50 EMA. You cross the 5 and 13 back to the downside, and again, your short trades are working well. You get across to the upside, change trend, put in a higher high, higher low. Now your long trades are working out. Bounce off the 50 numerous times. Again, the 50 EMA, significant support and resistance. Spread back to the upside, and now your long trades are working. Get a reversal bar, make a push down. Didn't really stay down long. Made a big push down, but as you can see, these 50 and 200 EMAs are just significant moving averages. Price doesn't like to get away from those for very long. Push to the upside, kind of chopped around in between the 50 and the 200, which is no man's land. This bar causes 5 and 13 to cross to the downside. Now you're getting good short trade setups again. And you can see, as long as you're on the right side of the 5 and 13, and ideally your best ones are, see how the 50 and the 200 are in confluence with the 5 and 13 to the upside. Now this is where you get these extended moves in your direction. But again, you don't want to be taking shorts. Nothing here is telling you to go short, and the short trades aren't really working out very well. Can you get a few moves down? Yes, but for the most part, you want to be trading on the bullish side of the market. Your long trades, each one of your long trade setups are working out and following through much, much better. You get crossed to the downside here, kind of chopping between the moving averages and the major EMA. Get kind of sideways here. You break to the downside, and now your short trades are going. You had this reversal doji triggered to the downside. 513 stayed to the downside, got under the support line again at 50. Look how many times you bounce off the 50. Got underneath the support line, came to the 200. You can see you kind of tested that several times, and then continued lower. So again, 5 and 13 to the downside, price under the major moving averages. Short is where you want to be looking to trade. Again, you can see long trades in this scenario are not playing out very well. Now you get extended, had a reversal doji and you pulled back, kind of consolidated, stayed bearish, and you move back up, went back up to the 50. You can see resistance, 5 and 13 break to the downside, and down you go some more. Kind of chop sideways, break to the downside, and down you go. You get the trend reversal breakout right here. Head back to the upside, 5 and 13 cross to the upside, and now your long trades are the direction you want to be going in. And again, you can see all your long trades are working out. Now you're up against the 200. You can see significant resistance. Look how many times hit it there, 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 there. And again, the 50 and 200 we know are significant resistance and support. You get above it, make it support, 5 and 13 to the upside. And now for the most part, long trades are working well. 5 and 13 cross to the downside. You're above all your moving averages. You probably don't want to be shorting here, but you don't really have, or you don't want to be going long here because 5 and 13 to the downside, but you're really not getting a lot of follow through to the downside because you're above the major moving averages. 5 and 13 cross to the downside, and now your short trades are working out. Back to cross to the upside, back above the resistance line at the 50 EMA, and now you're only thinking long again. And you can just follow this over and over. When you're across to the downside, look, your short trades. You don't want to be looking at long trades here. There's nothing here telling you that these are going to work out well. And as you can see, long trades are not following through well here. And this just keeps going and going. You get above your major moving averages, and you're looking long again. Break down to the downside, looking at some shorts. And there's always going to be periods of chop. That no market moves straight up or straight down. But again, you get separation to the upside, and now look, your long trades are working the best. You break to the downside. Now your short trades are working the best. And again, just continue to follow it like that. You see, you broke under the 50 EMA, popped above it, was resistance, pushed right back under it, crossed to the downside, and now short trades are working out. You down in here to the 200, you can see the 200 EMA, significant support. Cross back to the upside, now your long trades are working out. So just a little way that you can pay attention to that overall will keep you on the right side of the market. This isn't going to be perfect all the time, but in general, if you're trading in the direction of the 5 and 13 and the major moving averages, your setups in that direction are working out the best.